guys, I am Lydia Brathwaite, a realtor with Florida Homes Realty and Mortgage.
And my name is Torres. I'm a local mortgage broker with Elite Mortgage Advisors.
All right, so Louise, thank you so much for joining me today. And today we want to just educate first-time homebuyers specifically with the knowledge that they need to have when thinking about buying a home.
Correct, Lydia. Today's information is very important for all of you that are looking to start buying a home. So without any more, let's get right into it.
All right, so tell the viewers what exactly is a mortgage pre-approval and why do they need to have it?
So a mortgage pre-approval is the most important step when it comes down to buying a home. It's what tells you as a buyer that you are ready to start shopping. It's what tells your agent that you're ready to start looking at homes. And it's what tells a seller that you're ready to offer on their property. It is the single and most important piece of document when it comes down to buying a home because we have verified your credit, we have verified your income, we have verified your assets, and you're ready to start your home buying process.
So how exactly does a buyer's credit score affect the type of loan they would qualify for?
Absolutely, Lydia. So the type of credit will tell us which program you can qualify for. So for example, the minimum required credit for an FHA loan is 580. For conventional, it's going to be 620. For VA, technically, there is no limit for what credit score you have. However, very important, each lender has their own guidelines. So
Okay.
some lenders will say you need a credit of 500. Some other ones will say 580. Okay.
Yeah, because I saw that somewhere that, 580 is the standard, but if you're not below 500, you may still qualify for
Correct.
some
So
type of
there's always
financing.
a way for you to qualify even at those lower credit scores.
Yeah.
The main problem that most borrowers have is going to be funds. The lender is always going to require maybe additional funds for your down payment, for example, because of the lower credit score. Think of it the following way. You are offsetting the risk of somebody lending money to you because of your credit score.
Hmm.
Your credit score talks about your history of how good of a borrower you are. So how good are you paying debt?
Yeah.
So the lower the credit score, that tells the lender that hey, maybe this person doesn't have the best payment history. So they offset the risk by requiring more of a down payment.
All right, so you just mentioned income and employment history. Could you go just a little bit more in depth for
Of
viewers?
course. So we all need to meet 2 years of employment history. So if you are a W-2 employee, we need to figure out your 2 years of work history. Have you been W-2 employee the full 2 years, or did you come from a different industry? If you are self-employed, we need to verify that you've been self-employed for the last 2 years and in the same line of business as well.
All right, so that was some really good information there. So, what documents do buyers need to have to get that pre-approval? Essentially.
Absolutely, Lydia. So let's break this down into two separate categories. If you're a W-2 employee, we're going to request to see your W-2 for the last 2 years. We need your most recent month of your pay stubs, ID, and bank statements. Okay? If you are self-employed, we're going to need to see your two most recent tax returns. So as we're speaking right now, that's your 24 and 25 taxes, ID, and your bank statements as well. Very simple. So if you're looking to start qualifying for a home, this will be the main documents that you need to have if you want to get pre-approved.
Okay. All right. So, how much money should a buyer realistically have if, and which may, that question may vary a little bit because it just depends on the actual purchase price of the home. But what would you advise a buyer, first time home buyer, the amount of money they should have to be able to make a down payment for a home, the minimum amount?
Absolutely. So Lydia, I'm gonna catch a lot of fire for answering this question. You do not need to put 20% down on a home. Okay?
Okay.
A lot of people believe you need to have 100,000, 200,000 to buy a home, and that's not the reality. So for most people here in Jacksonville, you're looking at a purchase price of, let's say, 250,000. To give you an example, on a conventional loan, the minimum required down payment, if you're a first-time home buyer, is 3%. So 3% of $250,000, that's $7,500. We want to increase that to 300,000. Maybe we have a bigger home, different areas. Now you're looking at $9,000. So it will depend, like Lydia said, on your purchase price, but then also your current situation. Mind you, as well, I do not know your credit score, do not know your income, do not know any of your information as we're having this conversation. So if you're listening to this, those numbers can vary. Very important also for people to understand that because it's specific to your scenario. Your scenario is not mine, it's not the neighbors, it's not your cousin or your uncle. Because one person to another, we can have the same income, we could be looking at the same house, but you and I may have different debts. You and I may have different credit scores. You and I will have different risk profiles within our credit score. But as a bottom line, you could look at between 3 to 5% down on a home. That will cover you if we go on a conventional loan. That will cover you if you go on FHA, which is 3.5.
All right. So what's one mistake you see home buyers frequently make during like the home buying process?
So a very common mistake that I see, Lydia, is a lot of home buyers fall in love with the payment they see on Zillow. So Zillow does not know your credit score, does not know the type of loan program that you're going to have, does not know how much down you can put, doesn't know the cost of insurance or the property taxes. So a lot of times when you're at home in bed scrolling through Zillow, through Redfin, Realtor.com, you will see a house of 350,000, and you're like, holy cow, monthly payment is just $1,800. My rent is $2,000. Let's go buy this house. Problem is with that is your credit score may not be the exact same. 9 times out of 10, these platforms assume you're putting more than 20% down. They're assuming property taxes that may not be realistic. Homeowners insurance may not be realistic as well. So for you as a home buyer, I would say that that's the biggest and most common mistake that I see that I later on have to explain to all borrowers.
Oh wow. So that's it's important for them to do their homework essentially.
Absolutely, yeah. Not only do your homework, but also make sure that you have the right team in place for you. Because I, as a loan officer, will make sure to not only explain to you the realistic expectations for the purchase price that you may have in mind. Hey, FYI, if you're looking at a purchase price of 400,000, for example, in Yulee, your payment may be around this much. If you're looking at a house of 250,000 in Duval County, payment is definitely going to be the complete opposite. So sometimes setting up the right expectations early enough with our borrowers saves us a headache later on.
So let me ask this question. So let's say I used to I used to be a teacher. I was just making like $50,000
Mm-hmm.
annually, and I changed careers, and now I'm making 300,000. But my credit score previously
Mm-hmm.
wasn't good. I'm like 480, but now I'm making good money.
Okay.
How does that determine or come into play when it comes to now getting a loan? Like,
So the most important thing will be first, you have the job history. Okay. Credit score is going to be the hurdle we're going to have to overcome. So if your credit right now is not in the best position for you, we need to build a plan. That plan may not be right now. It may be we need to plan for the next 12 to 18 months. Because also, I don't want to put you in a position to where now you walk into a home and the terms that may not be the best for you when we could have probably worked on your credit for a year and now you have a better position buying a home.
So I would have to wait.
That will be one of the options. But if we do not have
my credit score,
correct, but if we do not have the option to wait, because some families you may have to move because of work, you may have to move because your family grew in size, or maybe you're downsizing, so you really need to move like ASAP. So that's when we need to have a conversation. Okay, how much funds do we have available? Are we able to offset the risk of your current credit score for some of these lender programs?
All right, so I got to go back here again to like the previous question, right? So let's say I'm a college student and I fresh out of college and I got this great land, this great job once again, and I'm making 300 and some thousand a year.
Okay.
I have no credit history. What are you going to tell me?
So first, congratulations for lining up with 300K a year. You're doing a lot better than most people, I would say.
Sure.
But so the first question I'm going to ask you, Lydia, is: were you a full-time student? Okay. So were you a full-time student? What was your degree on? What is your current job on? So your student history or your time in school is going to become your job history. So those 2 years that we talked about at the beginning becomes your school time. Now we need to connect it to what you're doing now. If your job is a full time, we have very high chances of qualifying you for a mortgage. Now, number two, for your qualification, because you don't have a credit score, we need to provide payment history for one of the three followings. Let's say rent. So you need to provide 12 months of your rent history for payments, utilities,
Right.
electric, water, Wi-Fi, car insurance. So those three could be things that I'm going to ask you as a student fresh out of college that wants to get a mortgage. Because you do not have the credit history, that becomes your credit at that point.
What if I don't have car insurance? My mom was
If
paying
you
car
do,
insurance.
do you have medical insurance?
Okay.
Do you pay your cell phone bill?
What about student loans? Does that come into factor?
Yes. So student loans is very important. I will always recommend people, let's try to do a good job making sure that gets paid.
Okay.
For the following reason: for your debts monthly. Okay.
Yeah.
Your student loans, we will use 0.5 or 1% of the total balance you owe. Okay, as your monthly debt. If you do not pay those and they go into collection, you want to know what's the percentage? 5%. So if you owe $10,000, it's not the same paying 1% monthly to the lender or the bank than 5%. It's going to be a lot higher. So let's make sure we keep that up to date.
So for someone who is not quite ready today to buy a home, what are the next steps they would have to take within the next 6 to 12 months to get themselves prepared, financially prepared to commit to this debt? Because it's a debt. It's a good debt, but it's a debt.
So Lydia, here's the most important thing that I always recommend all of my buyers and anybody that's really watching this video. I'll recommend you follow the same steps. The earlier you talk to your realtor and they connect you with a good loan officer, with a good lender, the better your chances will be in the future. The worst thing that could happen is your current situation. If your credit is low, if you don't have any funds saved, if your income may be too low, if we have a conversation today, I can almost promise you that in a year, if you follow the steps that we provide, you'll be in a much better position. I can provide credit repair plans. We can provide plans for you to save enough for your down payment. We can provide plans for you to maybe look into a different job. Hey, you're looking to qualify a $400,000 home. Great. You're making X yearly right now. This is how much you need to make in a year from now. And if you do that, then maybe you could qualify. So the bottom line is talk to us early enough. Let's get you ready. If you take action today, 9 times out of 10, your situation will get better in a year from now or 2 years. So thank you, Lydia, obviously, for inviting me to record today. This is great information for anybody that's looking to buy a home. Whether you're looking to buy today or in the next few years, you should most definitely contact any of us. We will be here to walk you through every step of the qualification process.
Yeah, because we want you to be prepared. We want you to not put yourself in a position where you're going to have to, unfortunately, like some individuals, they may have to end up with foreclosing on a home or
Correct.
just not be prepared. You need to know your debt to income ratio. You need to know your credit score. You need to know what else we need to know. What else we talk about today?
You need to know your credit score. You need to know how much you need to put down, how much you need to have saved, maybe what homes and what's the monthly payment that you're.
Insurance as well. All
Correct.
those things come into play. So this is your guy, Luis Torres, Elite Mortgage Advisors. Thank you so much for joining me
Thank
today.
you. Thank you.
The moral of today's lesson essentially is reach out early so that you can be prepared. All right? Take care.